Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, March 30th. Okay, yesterday we saw a lot of the headlines dominated by this Archegos Capital $30 billion yard sale, right? Family office loaded to the gills with leverage. Got the dreaded margin call and forced liquidation. We don't know a lot about all the details of all this stuff other than it, has embroiled a bunch of prime brokers and, forced liquidation of a lot of different stocks, a lot of Chinese internet stocks, Discovery, all that Viacom and all that kind of stuff. I'm no authority on the situation for sure, but I just want to emphasize to you that there's a lesson in there for all of us, and something you can carve in your desktop for all time because it's never going to change. Leverage kills. Write it down, memorize it, take it to heart. Leverage kills. It can be great when it's going your way, and it can be a disaster when it turns on you. And I don't know if you've had that personal experience, but I have. If you have been with me for any period of time, you probably know that at one point in my trading career, I had a position in Gilead when it was a rocket ship, and I had an insane amount of leverage on, and we were going to the moon. And then one morning CVS decided not to include Gilead in its formulary for the following year because I guess it was sending a warning shot that it didn't think too much of Gilead's $120,000 price tag for its Hep C cure, and the stock dropped like $20 in 5 seconds pre-market. And when you're sitting on an absurd amount of calls, you're simply wiped out. Now, I survived it, obviously, because I'm here. That was, over 5 years ago. But looking back on it, it was really, really stupid what I did to put myself out there with, all that leverage and, counting the days to retirement with each new level, that kind of thing. We're all susceptible to greed. We're all susceptible to stupidity. And whoever this guy was, Bill Wong, obviously had a master plan that included gaming the system on the way up, but he didn't plan for, a secondary offering by one of his on one of his stocks, or didn't plan on one of his prime brokers deciding to take down their exposure and requiring him to bring down his positions. So whatever the catalyst is, we never know what that is. And it's always going to come out of the blue, and you're never going to plan for it. So be really careful. Don't put your career, retirement, assets, in that spot where one unforeseen thing can wipe you out. I'll leave it at that. Let's get into the charts. That's the lesson for this morning. SPY yesterday was a nothing burger. That doesn't mean there wasn't anything to do. There was an early morning dip into this 393 area, which was an area that we had pre-identified as support. If you bought that dip into support, you got a $4 move into the close, which ain't all bad. Here's that dip right here in the morning, and found support in this area and then moved up. Now today I mean, literally it's all-time highs or nothing. We're here at 397. That's your pivot. Any break above could see, 400 by the end of the week, on this breakout. So if SPY were to take out 397, that prior high, I would be long and see if, there can be a push up to 400 over the next couple days. And then remember, we end the week on Thursday. So there's we got 3 days to get there. And that would be a logical target on a breakout above 397. The Qs. There remains a war at the 50. Totally different look than SPY, which is, battling all-time highs. Qs are battling the 50. Remember here, I've got a 2-hour chart, but, you could flip to a daily and see it. The 200 EMA on a 2-hour chart is equal to the 50 EMA on a daily chart. And you can see here that, we came off the lows and now we're up against downtrend resistance and we're right in here at the 50. Now I looked pre-market, it was about 640 as I started the video. ES was flat, NQ, NASDAQ was down about 0.5%, and small caps were up about 0.4%. So, we're right here pinned below this downtrend resistance and the 50 EMA. I would say if price can break above this 316 area, which is the 50 on this chart, and above this downtrend resistance, then there's an open door up to 319. But resistance is resistance until it's taken out. And given we're down, 0.5% from the open, remember that that'll leave a gap above. Be ready for the flash gap fill higher into that resistance. And that would be your objective short, right? A gap fill into resistance, into that 50-day moving average that has not been able to be taken out. That's your objective short with a stop just above. And hey, you know what? If price can power through and take out the 50, close out your short and get long, because that's been a wall. And if price can take out the wall, then it should have some running room and some power. But until it does that, I think the path of least resistance is lower. Now here on this chart, on the 30-minute chart, my downtrend line is slightly different. This is probably more accurate than the one on the 2-hour chart, just because this has more granularity and more resolution. We're going to open, down here about 0.5%. We could come up, right into this area and get rejected off this downtrend line. So, consider this a zone between 316 and say 317. I wouldn't be itching to get long. I would be in prove it mode on the long side, because up until this point it has not proven it. So I would be I wouldn't be dying to get long until price proves it. Because look, we got this level here at 321. That's a nice move. Say 317 to 321. That's $4. That could easily happen on a breakout. As far as I'm concerned, yesterday's trade of the day was IWM. They came after this thing like nobody's business, down about 3%, but that was from the open. That wasn't from the high. So we opened down here. Where did we open? We opened at 319. We opened at 319. Then we made a run to 321, right into this resistance area, right where price had tagged. We talked about it yesterday, where price had tagged literally 4 or 5 times the day before. Last Friday, wasn't able to get through. So if you had IWM on your matrix and you had your alarm set, or were watching for that opening gap fill, right? We opened a little bit lower, then we made a run back up to the prior high to close the gap, and then they pulled the rug, and that was your objective short. And if you got that, there was nothing left to do the rest of the day. It was, straight down. Here it is on an exploded view. We opened lower, came up to that 221, and then they pulled the rug. Now, what I did on a 5-minute scale, it really doesn't matter. I did a measured move of this, what looks like a flat bear flag to me. If there's a continuation down, if we break down from this flag, the measured move target points back down to backtest this low down around 210, 209. That would be really elegant. That would be a common technical move. That doesn't mean it's going to happen, but that's where the measured move points. Today, I would just use this 216 area where price is oscillating around as your pivot, above. And you could even box this in and say, okay, 217 or 215, let's say. In between is noise. On a breakout above 217, you can go for 218 and maybe back up to 221. Or on a breakdown, then this scenario comes into play with 213 being a support level, and then down to the prior lows. Facebook had a nice day yesterday. They got an upgrade from one of the analyst places, up about 3%. We had this initial run up to 293.50. We had the common check back for to retest this breakout, where it found support and now has bounced. So just using our technical analysis fundamentals, we broke down below 280, but then recaptured it. That was your long entry, right? And so if you got that, you can stay long. What the bulls need is a breakout above 293.50 here, and that would open the door towards 300, 302.50, something like that. Facebook's been on a nice run and is looking more constructive, better, especially compared to the other FATMAAN names. Apple's been dead money. It's hard to even get a trade going here unless you want to micro trade it. It's been oscillating in this range. We had a reach down, I believe, yesterday, touching the top of the gap, and then just oscillating here the rest of the day. I really think it needs to get above 123 and fill this gap on the upside, or fill the gap on the downside. It could stay in here for days or even weeks, but these are the technical targets, these open gaps, and it'll either go higher and fill the one first, or go lower and fill the bottom one first. Time will tell, and it's There's no way to predict that. Tesla has remained soggy. It was down as much as almost 3% yesterday. Came down to touch this open gap that I've got marked. It's in this very nice, nice if you're short or nice if you're a technician, nice downtrend channel. If it were to break out here, it can find 625, which was a level that we had marked. Otherwise, I'd expect price to be rejected here and come down and test this gap again. I think this lower gap is going to get filled. I think the air is coming out of the stock, but that's nothing to trade on. Just trade level to level. If price goes into this gap, even if you're not a big Tesla trader, you can get short at 595 and look for a $30 move down to 565 or whatever at these prior lows. And I think that would be a nice little trade. Or if you prefer, you can, go to the ARC names. ARC K, I think, holds over 10% in Tesla. So that can be a proxy kind of a trade if you don't want to trade Tesla directly. Microsoft is working inside this triangle. I just put this in this morning, and pre-market Microsoft is down about $1.50. So it's going to be testing this 233 area. On a break below, I would expect it to come down and test this gap again and possibly, fill it depending on what's going on. So I would not mess with it, in this inside the triangle. I would wait for a break below or a break above, and then you can, I think, more confidently take a long or a short, depending on which way it breaks, out of this triangle. Amazon is just oscillating. Yesterday, Free 50 Club fell about $10 short. The buy signal was on a recapture of 30.50, and it got to 30.91, so it was good for $40, but then backed off a little bit. Today, 3,100 is your pivot, but since NQ is soft on the open, I wouldn't be surprised if it opened more closer to 30.50, and if that's the case, use 30.50 as your pivot point. And I will tell you this, remember, if we open lower towards 30.50, there'll be that $20 gap above. So as long as 30.50 holds, you could get long, anticipating that gap fill. And if you get that, you'll be $20 to the good right out of the gate. Of course, you got to have your stop just below, and if it breaks lower from there, then obviously you got to get out and reassess. But with price opening at support, there would have to be some added selling pressure if it's going to go down towards 3,000, which of course would be a back test of this prior low and another test of this gap. Google. There was a nice little trade on Google yesterday. You got a back touch of this support right here at around 2005. What was it exactly? Yeah, low was 2005. And if you took that, you got to move up to 2045. And so that was a nice little trade if you were to take that. But as you can see, really, aside from Facebook, I mean, all these are just, hard to take anybody trying to take some kind of duration trade on these names, whether it be Apple or Microsoft or Google, or just getting frustrated and chopped to pieces. These little micro trades are great if you're nimble and you're active and you're there and you're watching it. Yeah, you could have pulled 30 or 40 bucks out of that, which is, a nice little trade. But anybody trying to, go long or short with duration is just getting killed. Netflix. Again, nice little trade. Came down in here. When was the open? We opened at 505, went to 504, right in here, or excuse me, right in here, there was your low candle. Here was the open, and then dipped down below 505. When it recovered, that was your long. And actually, we said the technical target was 517, and you got that. See the candle all the way up into 517 that got rejected. So again, the levels are there. It all depends on your execution and your nimbleness and your willingness and ability not to hesitate. 505 was an objective long, right? That was a well-defined level. Here it was support, 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 recapture, hold at support. That was your objective long. And if you did that, you got a $12 move out of it. So well done if you did that. Now today, 517 becomes a resistance level and a potential pivot point. If we open lower, which it looks like we're going to, then 505 is your pivot yet again, with a gap above to fill. And remember, we have not really filled the bottom of this gap yet. We have not gotten down to 493. So there's still work to do on the downside if they decide to sell off the Qs today. Before I get into these extra charts, I want to first thank you all for spending a little time with me. I really appreciate it. I hope the levels are helping you. The whole intent of these videos in the pre-market is to give you levels you can trust, that you can focus your attention on setting your alarms, setting your game plan, deciding which stocks you want to focus on, and then working on your execution around those stocks and those levels for that particular day. And if you've been doing that, I hope you've been finding some level of success, knowing what those levels are and then working around them. If you're new here and you like the commentary, please hit the subscribe button and the alarm bell. You won't miss a video. But also, I would encourage you to jump over in the show notes and check out the links, not only to the blog site where there's a lot of helpful articles on trading psychology and trading tips and tricks, but also to register for my content. And what will happen there if you do that, any emails, any trade advisories, any ideas, any observations I have during the day, you will get a nice, neat email in your email box, and you won't have to hunt for it. I am not as active on social media as I probably should be, on Twitter and all that. So if you register for it, register for my content, you'll get everything that I do in an email. Plus, you'll get an invite to our trading room where you'll find a lot of good guys and gals with big hearts, working hard to become better traders and supporting each other in that effort. So I encourage you to do that. If you're a long time subscriber, please pass along links to my content and help build the community. I want to thank you because we're starting to get some more YouTube subscribers and subscribers to the channel. So I really, really appreciate that. So today, and actually yesterday, keep an eye on TLT. You know, we're all bond traders now, right? Yields are rising again. We had this burst in TLT, which we had anticipated, right into the teeth of resistance at the 20, and this lateral resistance here was rejected there, and yields are going back up again, TLT going down again, and pre-market yields are up again. We are down in this 133 area. Actually, I had seen pre-market that we had broken this 133.19 low. That could open the door. That could open the door to the next leg down in TLT. And based on this structure, easily into the high 120s, 128, 127, 126. There's not a lot of support down here. So keep an eye on that. Anybody that took a TLT short into the 20 here is golden, but I still think there is going to be room to the downside on TLT. Yesterday, I sent out this trade advisory on XBI, small cap biotechs, big head and shoulders with a break below. And take note of this technical action. Break below 200, back test, fail. Very common technical move. Right back down here to the lows. Here was a low, here was a low, here was a low. I went ahead and took a micro position just to say I'm in it. I got April 125 puts. If this thing breaks free, I think it'll go fast, but I didn't want to go out there with some, big position. If I start seeing something intraday, I might add to it. But this is a powerful structure, and not a lot of support in below here, especially below the 200. And that can be a good line in the sand for you if you want to, take a position in that. I went ahead and pulled up the IBB, which is the large cap biotech. You might have to use your imagination a little bit on this left shoulder, as it didn't come all the way down to the neckline at 146. But, I mean, pretty powerful structure here as well. I would alarm 146. Note the posture of the 200 coming right in there. So, like XBI, a break below the 200 should give it some downside momentum. So I've got the 200 at 145.50 alarmed. And just remember, alarm doesn't mean you got to take it. It just refocuses you on that stock. And then you can put it in context with everything else you got going on to see if you want to take a position. But of the two, I think XBI has more potential to the downside. Why? Because the valuations are in general a lot higher on a small cap biotech than, say, an AMZN or a Gilead or any of these big names that are in the IBB. So that may bear some consideration on your part as to which one you want to take. Just some other charts here. This is XOP, exploration and production on oil. Set yourself an alarm at 77.50, which is the confluence of lateral support and the 50 EMA. If you were to get a break below this 77.50, I think you could see 70 pretty quickly back down to this support level where it broke out. If oil pulls back, I think that would be a nice way to play. Or if it pulls back and simply holds the 50, that becomes a nice long. So I think 77.50 is a good trade location, whether it be long or short when it comes down to that level. We'll have to see. SMH, Semiconductor ETF, I think this is a good one. Even if you're not going to trade it, it's a good one to watch for risk sentiment, right? We've got this trading range that it's developed between 242, 242.50, and let's say 230 to 226. If we were to get a push into 242, that's your objective short against resistance. If it breaks out, I think it finds 250. If, risk on becomes a dominant theme, if we go risk off, then it's going to be back down to the bottom of the range, down in here towards 230, 226. Now today, we do have a pivot point here at 236. So if you're active and nimble and see 236 break, if the cues fall apart, you could come in here to, break down into the 234s and the 232s today and tomorrow if people get a little skittish heading into the 3-day weekend. Also, in the past few days, we've talked about the rotation into safety, namely REITs, consumer staples are two hot sectors. We had flagged Hershey several weeks ago as a trade idea on this breakout, really starting to move. If you took that trade, you are, you are $8 to the good already with the stock running. So stay long and roll your strikes up, roll and protect, roll out, stay long. I wouldn't be adding here. I would be maintaining that position. But I mean, these stocks look good. Procter & Gamble, Kimberly-Clark, Clorox, all that stuff is doing well. This is Sanderson Farms, chicken producer. Breakout, back test. I like this setup for a long. If you can get something in here around 155, that's an objective long. I think these stocks go higher. You can look at Tyson, TSN, on the weekly chart. You see a breakout there. That's another tight setup. But thumb through your defensive names in the XLP sector. You will see a lot of charts, and try to get something objective. Don't grab a Hershey that's up $8 in 5 days. That's not an objective trade. Try to get something that's tight, either on a back test or a breakout like this one on this back test. The trend is up, back into support. You can confidently take a long there. That doesn't mean it's going to work. That means it's objective. So, okay, let's wrap it up there. Let's see how we go today. Remember, short week, and remember what Peter Brandt says, the famous market wizard technician. There's nothing more important than how we close a week heading into a 3-day weekend. Why? It speaks to risk sentiment. Do people get scared heading into a 3-day weekend? Not so much today, but Wednesday and Thursday. Do people want to go out there with duration trades over the weekend, or do they say, you know what, let's back off here. Let's see how it goes, and we'll pick up the ball next week. Also, big quarter end rebalancing today and tomorrow, probably mostly tomorrow, but possibly today, where you could see some dramatic rotations as these monster funds, pension funds, do their quarter end rebalancing heading into Q2. So And don't forget, the big banks will start reporting. I haven't looked at the calendar. I think it's next week, but certainly within 2 weeks, a whole new earnings cycle will start up again. And then that'll give more fundamental information to those people that watch it on how earnings are going and how they want to allocate their trades. So I hope you found the information useful. Certainly have a good day of trading. Stay objective. Go level to level. And I think you'll do really, really well. This has been Chris Buss with Traders Profit Compass. Talk to you next time.